Well, good evening, everyone. And now it's time for our final accounts preparation revision session. And this time we will be covering incomplete records. First of all, use of control accounts. And then secondly, use of ratios, by which we mean when we're given data on markup or margin and so on. So, incomplete records. The first part, we're going to look at how you find a missing figure using either sales ledger control account or purchase ledger control account. And then later on, we'll look at ratios, and which technique you use depends entirely on the question. So you need to be able to look at the question data and, identify whether it's a markup, a margin question, or whether it's just a control account. So we're going to look at the sales ledger control account for this example. We could equally well use purchase ledger control. The only difference is, they are essentially a mirror image of each other. Let's start, as we did before, with a couple of warm-up questions. How many items can you think of that increase the balance on the sales ledger control? Is the first question. So just chuck whatever you can think of in the chat box. How many items what sort of transactions increase the amount that customers owe? Any answers coming in? Sales, good, yep. I can think of another one. I can think of a second item. Okay, so far sales. Second question. Ooh, credit note. If I give a credit note to a customer, that reduces how much he or she owes me. So the second question, discount. No, discount allowed. That's going to reduce. Contra, that's going to reduce. Second question, how many items can you think of which reduce the amount that customers owe? I've got a few in here. So I'll accept credit notes, discount allowed, and contra as things that reduce. Payments, excellent. Yep. Customer pays his bill. He doesn't owe as much. Oh, yes. Bad debts, excellent. Sales returns, yep, excellent. Yep. Okay. So my lists are items that increase. I've got sale, we all got sales. But the other one is dishonored checks, which we colloquially refer to as bounce checks. I appreciate that checks are receding into history, but there are still people who will post a check to a supplier to pay a bill. If the supplier takes the check to the bank, pays it in, and then the bank sends it back saying, very sorry, there's no money, you can't have your payment, that's a dishonored check. So that will have to be put back on the customer's account. It may well end up eventually, of course, there's a bad debt. But initially, it means you'll go knocking on the customer's door saying that your check's no good. Can we have some cash? Items that reduce the balance. Yep. Payments. Yep. Returns. Discounts allowed. Bad debts. And contras. You got all of those. So well done, everybody. For a team effort, we got all of those. So there's a lot more items that reduce. Now, thinking of which way it works, this balance on the sales ledger control is an asset. Because if I think to myself, would I rather have somebody owe me money or would I rather owe them money? Well, I'd rather have money owing to me anytime. So it's an asset. Therefore, the balance is a debit. And from that, we can deduce that anything that increases the balance is going to be a debit to the sales ledger control. Anything that reduces the balance, those are all going to be credits. So that's the fundamental piece of logic that we're going to use to unravel a problem like this. The sales ledger control is an asset. Therefore, anything that makes it bigger and a balance in it is a debit. Anything reduces it is a credit. I should do that way from your angle, shouldn't I? My credit is your debit, of course. So let's look at a typical question. This task is about reconstructing general ledger accounts. I cribbed those words straight off AAT, is what they always say. You have the following information. Is the chat panel in the way? Do I need to move the chat panel to the side? Or can only I see that? Okay. There we can see we've got a table of figures we've been presented with. I'll bring the chat back in a second. Button's not working. In the sales day book, invoices for the year total £203,400 plus VAT of £28,101. Let's put that down. Now here's a question. How much are we going to post in the sales ledger control? Quick question for everybody. Are we going to post the net value of 203,400, or are we going to post the value including VAT? Which of those are we going to post in the sales ledger control? Gross. I hope you mean gross in the sense of including VAT. Yep, excellent. A popular error in, under the pressure of the white heat of an exam is to forget that. My simple logic there is, last time I was a customer in a shop, how much did I pay? I paid including VAT. So sales ledger control is what customers owe. It always includes VAT. Worth exploring, I thought. Okay. Bank payments to suppliers total £142,230. Receipts from customers total £233,824. You may be thinking by now, why are we interested in all this? And one of the jobs we have to do in this is to actually pick out which data we are interested in. Next bit of data. Sales returns daybook credit notes come to 1130 plus VAT, and we've pretty much agreed that we're going to take the gross figure including VAT there. Discounts received from suppliers come to 2350 plus VAT, but unfortunately the discounts allowed daybook has been mislaid. Now what's required? Calculate the total discounts allowed for the year by reconstructing the sales ledger control account. So that's better. It's out of the way. So now looking at that table of figures, there's a lot of stuff there that's not needed. Items we do need: trade receivables, trade payables. Which one's customers? Which one's sales ledger control? Because we do love using all of this different language. Any offers for receivables or payables? Which one of those is the sales ledger control? Excellent. Yep. Receivables has it by a unanimous verdict. Thank you. That's great. If again in an exam, your mind goes to cheese and you forget what's what. You receive from customers. So yeah, receivables. So we're going to want these figures here. We're not interested in payables. We're not interested in inventory. We're not interested in bank. Not in this context, at least. So like we said, much of the data here we can just ignore. We only need the two that I've mentioned. Which is those. That's all that we need. So let's now summarize the figures that we're going to use. We need trade receivables opening balance. We're going to need the sales figure. We're going to need the receipts figure. We're going to need the returns figure. we're going to need the closing balance. Those are the figures we're going to work with. And now we can reconstruct the sales ledger control. Here's our account. And let's put the data, I'll summarize the data down here. So opening balance for trade receivables, people that owe us money, that's an asset. So the opening balance is going to be a debit. One down. We've already agreed when we talked about it that sales of 231501 will increase the balance. So that's also a debit. Two down. Receipts from customers will reduce the balance. Reduce an asset is a credit. That's the credit side. Sales returns, if the customer sends stuff back, that reduces the amount owing. So once again, put that on the credit side. Another one gone. And finally, before we do the closing balance, we need to put in discount allowed. We've got to leave a gap for where our missing figure is going to go. Discount allowed, does that increase how much the customer owes? Does it reduce it? It's going to reduce it. So that's going to be another credit. So then we can put in the balance carried down. So far, so good. Everybody happy with the logic of what we're doing here? Yep. Carry on. Okay. Grand. Thank you. Grand. So let's balance off the account. Two lines in. At a glance, logic suggests that the debit side is going to be the greater, isn't it? Otherwise, the gap would be in the wrong place. Let's add up the debits. 25370, Debit side totals 256871. Total up the credit side. 233824 plus 1356 plus 21271. Comes to a total 256451. The debits have it, so that's our balancing total. Take one from the other. Sure enough, the discounts must be £420. And that's our answer. The missing discount figure is £420, which of course includes VAT. Now that discounts has changed from how it used to be way back. Let's not get into all that. So, a conclusion regarding the sales ledger control. You just have to remember that money owed by customers is an asset, and therefore anything that increases the balance is a debit. And it really is, that is the only rule that you need. The time we come back to this time and again, an asset is a debit, an asset is a debit, an asset is a debit. There's very few problems of double entry that you can't resolve without one little bit of logic. And conversely, anything that reduces the balance is a credit. And finally, I mentioned at the start, I'll say it again, if you're doing an exercise looking for one of the purchases figures, it's exactly the same logic, just the other way around. And in that case, anything that increases a liability is a credit, that reduces it is a debit. So that's that technique, the first half of that. Anybody have any questions on the use of that technique? Or shall we move on to part 2, which is going to be use of ratios? We're all looking good. Chat box is quiet. We're all okay. Okay. So, good. You're happy, I'm happy, as they say. So, incomplete records. We're now going to look at how to find a missing figure when we're given ratio information. And what we do is we use the template for the trading account, which is, of course, the top bit of the statement of profit or loss. We're given information regarding the gross profit markup or margin. You have to be careful there because markup and margin are kind of related, but not the same thing. So once again, let's lay out a typical exam question. You are preparing the year-end accounts for Blomqvist, a sole trader. There'll be a bonus mark at the end for telling me where the names come from. Due to a flood, a large amount of inventory has been destroyed, and you've been asked to help calculate the value of the insurance claim. The following information is available. Sales for the year, £235,200. Opening inventory was £13,282. Purchases were £178,444. Remaining inventory, that's what's left after the flood, has been counted and is worth £6,752. You are told that the trader sets his selling prices on the basis of a profit margin of 25%. And it is vital that you know between a markup and a margin. I believe we have got one of these classes on markup and margin somewhere along the way. So some workings. If the profit margin is 25%, excellent. Yep, thank you. Sales is 100%. Excellent. Gross profit is 25% of the value of sales, from which we can conclude that our gross profit in this case, which we won't actually need, but I've worked it out, is going to be 58,800, which is 25% of 235,200. What's really important is that that means that cost of goods sold is 75% of the value of sales, which is 176,400. That has to be the value of cost of goods sold. And that's the figure that we're going to use to unlock this little puzzle. So, first job in solving an exercise like this is to lay out the trading account. And it is absolutely vital that we know this. You meet this time and again, level 3, level 4. We're going to fill in the figures that we've already got in this template. So we start with sales, which is 235,200. Then cost of goods sold, which is of course opening inventory, which is 13282, plus purchases, which is 178444, less closing inventory, which is an empty box. That's the figure that we don't know. What we do know is that that lot together comes to £176,400. And just in the interest of completeness, which leaves us with gross profit 58,800. The last line we don't really need, but it just looks neater. And dare I say it, the more logical it looks, the easier it is to remember a technique like this. We're used to seeing sales as cost of sales is gross profit. So for the sake of an extra line, it's worth doing. So what we know is that 13282, which we've got here, we know that that, now why has it done that? Okay, try again. We know that this figure plus this figure minus this figure equals this figure. So let's do a little simple bit of calculation. We know that 13282 opening inventory plus 178444 minus the mystery figure equals 176,400. And we're back to school now for for equations. That means that if we add the mystery figure to both sides, 13282 plus 17844 equals 176,400 plus the mystery figure. If we now take 176,400 from both sides, we know that 13282 plus 178,444 minus 176,400 equals the mystery figure, and therefore the mystery figure is 15,326. But here's another tip. Always test an answer like this by going forwards. So if you do 13282 plus 178444 minus 15326, make sure it does come out to 176400. That just guards you against having muddled your method at all. So if 15326 is the closing inventory as it should have been, and all we've got left is 6752, the amount that must have been destroyed in the flood and therefore needs to go on the insurance claim is 8,574. And let's just fill the template in once again, and there it is. Say a final check, always make sure that that actually does work. 13282 plus 17844. And sure enough, it does. It's a good precaution because, you know, if you get something like this in an exam to tackle, none of us really perform at our best in exams. Oh, Amy, right. Insurance number 6,000. Let's just roll back. The 6752, that, Amy, that was in the original data. We were told in the original data that there, the remaining inventory is valued at 6752. That is how much is left after the flood damage. Okay, does that answer your question? Yep, grand. Okay. Fastest finger first. What was that in? Okay. And there we are. So, final thoughts in respect to this. Thank you, Olivia. I really didn't know that. Millionaire, everybody. That's fastest finger. Of course it is. Chris Tarrant. Yeah. Gotcha. Thank you. Final thoughts. Number one is read the question carefully. Obvious thing to get wrong is markup and margin calculation. And that is just going to skew the whole answer if you do that. Make sure you know your template, and there really isn't a whole lot that can go wrong. This was a technique I always used to think when I first learned this. I thought, I never remember this, it's too complicated, but it's very logical. Dare I say, if you get a question requires you to use these techniques, as long as you keep the logic in mind, they're all right. Has anybody got any questions at all on what we've covered there? I've talked too fast again. Is everybody happy that that all made sense? This is a typical exercise that you may well, yes, the second half especially, I've more or less cribbed out of typical AAT past papers or past papers, sample assessments that I've looked at. Yes, so the second one is a very typical example, very typical. Great. Oh, well, if everybody's happy, I'll put you just onto our thank you screen. And so the second half, there is a recording of that, which I'll now stop. It just remains for me to say thank you, everybody, for attending, and I look forward to next time. Thanks, and good night.